Ladies and gentlemen, welcome to Only Trade to Win. Today we are doing the review for May 2024, and for the first time I am using the camera because the channel has outgrown its capacity of being a faceless channel. And when it comes to money, I personally would like to see the face behind the voice and behind the picture. So here I am. My name's Lubim. I've been in the financial markets for over 25 years. I own the registered investment advisory firm in Denver, Colorado for more than 10 years. And I have helped thousands of people to learn how to invest and how to trade. This channel is designed more for a mature investor. This is not for teenagers who are starting out. This is for people who would like to put in the work, but they do not know how to do it. What I'm doing here is I'm sharing with you a structured approach to something as unstructured as the market. On your screen, you can see column number 1 are all the stocks that we are following. Of course, they're the leaders. And one of the things that you need to learn is that if you cannot make money trading or investing in leaders of the market, you just cannot make money. I believe that the safety or return of your investment is a lot more important than a return on your investment. With that in mind, we concentrate on the stocks that have the biggest inflows from institutional money managers and portfolio managers, those people who know a lot more than we do. What you see on your screen is updated information based on the closing price for the last day of May 31st on Friday. Here, column number 4, this is change for May. And again, our leader for 8 months in a row is NVIDIA, which is followed by Apple. And Meta is in the 3rd place. NVIDIA has reached the price target that I set at the beginning of the year at $830, where I took profits. And then if we look back, I noticed and pointed out that when NVIDIA pulls back 15% or more, it's usually a good buying opportunity. And again, there was an opportunity to get in again, and I'll share it with you in a second. Now, here are our leaders for the month of May. And here is our leader for the year. Number 1 is NVIDIA. Number 2 is Meta. Number 3 is Google, and Amazon is close in the 4th place with respectable 18%. Now, let's remember that we are not even half a year into 2024. And again, it proved to be phenomenal. The one thing that you need to note and remember is that we follow the big money, and the big money knows where the opportunity is or where the opportunity is not. So we look, our last place for month of June is Tesla, and it is also the loser for the year, down almost 30%. Now for Tesla, it's not a big number because it can be up 30% in the next week, and in the next 2 weeks it could be in top 5 or even in top 3. So next thing what we're going to do is we're going to go and we're going to look at the picture of Tesla. I do not like calling them charts. I call them pictures because they give you much better information when you approach it as something, as a snapshot of certain period of time. And if you tell somebody it's a chart, people look at it like something more permanent, and they try to find laws. But there are no laws except that if there are more buyers that are more aggressive than sellers, the price goes up. And if the sellers are more aggressive than buyers, then the price goes down. So let's go and look at the picture of Tesla. Here is our daily picture for Tesla. Let's look at the screen together. Right here on the left side, you have all the different tools that you can use. So when I'm using tools, I'll try to make a reference for you. The site that I'm using is TradingView. I have the basic subscription plan. I do not need anything else. I used to have a free plan, and then I switched to the paid plan just because I need some features to show and explain several things. But you can get started with using the free plan, and it should be plenty for you. And one of the things that I would like to mention is that when you're starting out, a lot of people run out and get expensive courses, expensive computers. I see beginners starting with a setup of 4 or 5 monitors, and the one thing they can tell you is that don't do it, because there is so much going on that it is hard to follow one thing. And first, you got to learn how to walk before you can run. So start looking at the simple one page, one layout. Like layout I have right here on my right side are the ticker symbols that I follow. And here I have a picture, so it's pretty simple and straightforward to know what I need to do. If I need to look at something closer, again, we're looking at Tesla here, and Tesla is our big loser. Here is a $300 July 2023 are down 40% from its all-time high. We make it red. Tesla is down 40% from its all-time high, while NASDAQ, here is my NASDAQ 100, just pulled back from its all-time highs that it set last week. It is down 2%. You always want to take the security that you're looking at, the commodity or whatever it is, and compare it to the index, because Tesla is relatively weak. We know that NASDAQ is down 2% and Tesla is down 40%. So institutional money managers are pulling money out of Tesla. TradingView is a very intuitive program. If you click on what you just drew and you hit delete, it goes away. Then we grab this tool. These are my favorite tools. This one with the arrow up shows you what the change is. And in this case, the good news for Tesla is that it is up 28% from the lows it set back on April 19th, 2024. So a month and a half ago, Tesla set its low at $139. Then it ran up 30%. And pulled back a little bit, sitting at $178 a share. How did we know to stay out of Tesla? If you look at my program when I did the review for 2023, you can go to the channel's video and scroll down until you find this funny looking thumbnail with podium. Let's have a quick listen to what I had to say at the end of last year. Now, from July till end of the year, it was very uneventful because Tesla did not participate in the broad market Santa Claus rally we had, but for some reason, not Tesla. So we wait and see what the stock will do next year. And for us, unfortunately, Tesla will not make it to the 2024 watch list. And as a beginner trader or investor, one of the concepts that you need to study is relative strength. A lot of stocks and indexes made their all-time highs and even more made their 52-week highs in December. So the stocks and indexes that did not make it at least their 52-week highs must have a good reason that is already being reflected in its stock prices. Otherwise, why would a wonderful company like Tesla sell at such a huge discount? We do not know the reason, but if we wait long enough, we will find out. They will probably tell it to us on TV, but by then, it will be too late. Okay, this is what I had to say at the end of last year. Here, it was trading at $239. Here it is. January 9th was the date when I was making the show, saying that the stock is relatively weak. It went down as much as 42%, and now it is sitting 26% below the opening price for the year. Again, as I always mention, I do not know where the market is going today or tomorrow, but what I do know and what I have is a methodology on how to approach this environment, and Tesla told us that there is danger. It gave us a lot of dangerous signs, and last year I had several videos on Tesla. I said we are removing it from our watch list. I think more appropriate was that we are removing it from our portfolio because we cannot remove a stock like Tesla from our watch list. It's one of the leaders, it's one of the most traded and one of the highly speculative stocks on the market, and it's one of the most innovative companies, so we have to keep it on our watch list. But keeping it on our watch list does not mean we have to keep it in our portfolio when it is showing us clear warning signs. Down below, if you see these little boxes that look like a house or an upside down house, these are the earnings. The green house looking up is when the company beat what the Wall Street was expecting. Here you see right here, estimate 79 cents, reported 91 cents. In terms of revenues, 24.217 was estimated and 24.927 is what it reported. Now, if you see this upside down house and it's red, it means that the company missed. Estimated 72.9 cents per share and it reported 66, and it missed the same on the revenue side. Estimated 24.188 billion and it reported 23.35. And this whole game is about expectations and meeting, exceeding, or guiding higher. The one thing that right now is going on, let's look at the news. Right here you see this lightning sign in the circle. This is where you find the news. And here, one of the news that I noticed today, BYD's made deliveries show tough trend for Tesla. I personally do not care anything that comes out up from China because all that information is fabricated. It's not true. There are videos on the internet that are showing huge fields of BYD vehicles sitting with license plates. That's how the Chinese government manipulates the numbers. And if we look in the United States and around the world, I don't think we'll find one field of Teslas sitting there just produced and licensed for the purpose of showing or rigging the numbers. And it's one of the reasons why I recommend investing only in the United States, maybe in Germany, because we know that the information that is provided to us is most likely to be true. And for the United States, again, if we look in here, I am pretty confident that these numbers are true. So let's look at the last quarter. Tuesday, April 23rd, estimated 49.492%, reported 0.45, and the estimated revenue 22.22 billion. It came in with $21.301 billion. Pretty spectacular because company is approaching the $100 billion a year sales. If we go back 1 year, so we go 1, 2, 3, 4. Here is the quarter, same quarter, Wednesday, April 19th, 2023. The reported revenue was $23.32 billion. And now we are at 21. So we have a decline of about 10% in revenue. And let's look at the stock price. Again, we remove this thing. We grab it again up here, from here, just from the middle. This is not exact. It's just approximate. And we see that the stock price is up 11%, while the revenues are down 10%. So go figure. There is no exact science to it. This is more of an art combined with the science. And one thing, we're going to go back up here and we go on weekly just to get a better picture. Down here you have this cogwheel. If you click on it and go up here and you hit out of its data to screen, then you'll be able to see what the stock looks like from the longer term point of view. This is 2019. This is 2024. We have 5 years of data. You grab my favorite tool. You go to all-time high, which was set in November of 2021. You come back down here and you say, okay, Tesla is down 57% from its all-time high, which is quite significant if you think that NASDAQ made its all-time high just a couple days ago. And that is your concept of relative strength and weakness. We saw that the stock was not acting right back here in July, then again September and December. While the market was making new highs, Tesla was making lower highs. We make it red, we remove this part so it is easier to see, and here you go. At the beginning of the year, we could see while the market was making all-time highs, Tesla was making lower highs and lower lows, which means that the sellers were becoming aggressive and they wouldn't wait until the stock would come back here. So it's a 297 was our high, July 2023. Then our next high was in September of 2023, but it only made it to 278. And when we had a big party with all-time highs on Apple, NVIDIA, and NASDAQ 100, also the S&P, Tesla made another lower high at $262. And from there, as we just talked about, it proceeded to drop another 47%, rebounding a little bit, now sitting down about 30. I hope this gives you a better idea in terms of looking at the pictures and looking at the numbers of underlying securities. Now let's talk about a leader. Here is again weekly picture for NVIDIA. The biggest opportunity that we had was here. Again, I have a show on it. You can look, it is on the channel under NVIDIA. Now if you look at this blue line right here, what I did here was basically, let's make it a little bigger so you can see it better like this. First time we touched $500 was in August. Then from August 2023 until January of 2024, the stock consolidated between $500 and $400 a share. Here, let's see, low $394. In October, it wicked through this $400 mark, but again, it was once it touched the 500, here is your 400, here is your 400, here is your around 500 consolidated for 140 days. And the thing is that the longer the stock consolidates, you can move pictures anyway you want in TradingView. I'm going to bring it in like this. So we're looking at October of 2022. I'm just picking random place, but in this case, here we go from here to here. It runs up 350%. Again, I am using my favorite tool. It looks like an arrow here, and on the left side, where the tools are, I'm right here right now, all the way to the left side. This is where it's at. You have different tools that you can have, and here you put a star next to it, and then it will be attached to this little thing that you can move around. I use these a lot, so I added them to my favorites and I keep them here all the time. Let me just move it in here so you can see when I am reaching for it. I color code everything because your brain will not be able to perceive a lot of information at the beginning. And when you color code, it's really easy to scan around the screen and actually see what's going on. And you will come up with your own methodology, you come up with your own things that you like to do, you come up with tools and things that help you. I just share with you the ones that I use, and I hope that you will implement the only ones that are helpful to you. There is no need to use tools that are not making sense to you. I do not know what will make sense to you, so I'm trying to show them all, and I know it's a lot. So the beauty of the video is that you can always skip forward the parts that you don't like and come back to the parts that you like. Again, we know that the rally started in November of 2023. Apple was the first one to take off and the whole market followed. We're looking at NVIDIA. NVIDIA had the largest run, up 350% to this point in here in August of 2023. Really quickly, before we jump into the details, I just want to talk more about tools that I use. This one tool is so valuable that I keep it on top, and on the left side, if you go and you find any of the tools that you use a lot, you open it up, and if you put a star next to it, then it will be attached right here in this little box. So I am adding my price range, and that is the one that I use the most. So I will just pick the point in the past from where the stock started to run. And from NVIDIA, it was in October of 2022 going to August of 2023. At this point, the stock was up. When it touched the $500 mark first time, it spent quite a long time consolidating there. So the stock runs up 335%, then it consolidates for 140 days. The biggest drawback was from 500, we went to 400, which is about 20%. And if you look back, this was one of the largest pullbacks that NVIDIA experienced. And by measuring all the past pullbacks, we estimate on where the good entry point is and try to buy that pullback. So we run up 330%. We touch the $500 mark. We consolidate between the $500 and $400 level for 140 days. What is happening here? There are a lot of people taking positions. These consolidations are important because people taking positions, some people are selling their longs, they're taking profits. Some people are buying thinking it's going to go higher. Some people are thinking, okay, we're done. This thing is going to sell off, and they're establishing short positions. So there is a lot of activity going on here. And when one side is wrong, we get that. Just imagine a rubber band. It gets pulled back, pulled back, pulled back, pulled back. The further you pull it back, the stronger it will snap. And in this case, we are pulling the rubber band back for 140 days. It's a lot for a stock like NVIDIA, and it's a lot for any stock. They can go on for a lot longer, but again, sometimes they consolidate for a few days, maybe a week, 2 weeks, and then they take off. But in this case, we got quite a long period of time where people were there was a lot of interest in this area. Now, I was looking at the numbers and just looking at their sales, comparing it to previous years. And one of the things that I assessed for myself is the price target. I'm going back to the daily, so we're going to get a smaller picture, but on the smaller picture, we can see the earnings. And in this case, I just went back and I calculated how much money the company was making a year ago in the same quarter. And I compared a few quarters. I just ran a few numbers and I said, my personal price target was $830. So let's just go back to our watch list. Here we have NVIDIA is leading, and it is January 31st, $615. You can see that the watch list changed quite significantly, and you will experience the same thing with yours. You will just add, subtract things, color code it, make it easier to see. Again, here are all the numbers that I was looking at. It's quite a lot. It's really interesting to look back because the estimation was for $830. It reached that level. I did take profits, and the next thing I did, I started a small paper trading account just to see if my theory holds true. And the best thing to do it is to test it with fake money. One of the things that I strongly advise is to paper trade all your ideas, because if you're wrong, it's not going to cost you anything but your time and effort, and you will still learn a lot. A lot of people say, well, you need to start trading with real money. And I'm sure that those people are related in some way to the brokerage industry, because the brokerage industry will not make money if you sit here and you paper trade and you test your ideas. What they do like you to do is to jump in and start pushing buttons because that way they generate commissions and they make money. What happens to your account, it can get destroyed. So if you learn one thing from me, just test all of your ideas on paper, and once they start working, start small size. You say, what is a small size? Well, you can trade one share. And in case of NVIDIA, I knew that if it pulls back 15% or more, it would be a good buy level. So what I did was, when it made this high after it reached my price target, I just put a bid in 15% from the highs. I am moving this box with tools over here. Okay, so let's just go like this so we can see the number. Okay, I put the bid in here, 15% from the highs, and on April the 19th, it got filled. And from there on, it went a little bit lower. So I did experience a drawback on this account or on this position. And fortunately for me, because I had some profit, it really is much easier to sit through the drawback while you took some profits. So put a bid in approximately 15% from the high. It fills me at 836, and then it proceeds to sell off for about another 6%. Okay. Fortunately, it was only 1, 2, 3, 4 days. And after 4 days, it took off, and so far it has not really looked back. Now, one thing that I did was that I took profits here before the earnings, because if you look at my favorite Meta, I had a good position, I had a really good price, I had a really good profit, and then boom, we gapped down. So NVIDIA was the last one to report the earnings, and I did not want to experience the same, so I sold half of my position. Now, look at this. On only 5 shares, this position is up $1,300. Let's close up with NVIDIA, and then we'll jump to reviewing the positions and the performance of this paper trading account, small paper trading account. We get filled. I take profits before earnings on half of my position. Fortunately, the stock takes off and it trades in this level. Just to give you an update, I looked at the numbers, and it's also in one of the videos. My new price target is, on the low end, it was $900 before the earnings. And the high end, it was $1,500. What's going on with NVIDIA right now? They are getting governmental contracts, and I think that their revenues are going to go through the roof. I think what we've seen before is just the beginning. You know, this company is holding the key to the new industry that is booming. Everybody's using artificial intelligence. It came out less than 2 years ago, and now it's everywhere. So I don't know. We still have time. We have a stock split that is coming up on June the 10th. Normally, they run up into the splits. I don't want to get into it. You can go back and look at how stocks perform, but this is the most valuable company in the world right now. Even though the market cap is not the highest, but everybody wants this stock. And if you look at my show November, what I was saying that every money manager will want to buy it. They drive this price down, and once they're done, normally the price stabilizes, reverses, and once it gets to new highs, that same fund will come in and buy it again. They're all going to buy new highs, because if they don't have this in their portfolio, they're going to get fired. Just think about, you're paying somebody to manage your money, and they come in and say, well, here's our performance, and we're looking at this, and we're looking at that, and you say, well, do you have NVIDIA? Do you have Apple? Do you have Amazon? Do you have the leading stocks? You know, do you have the First Solar, which is going to the moon right now? And if they say no, you say, well, this guy or girl, they don't really know what they're doing. But if the performance is poor and they're holding quality stocks, then we tend to overlook the performance and say, okay, you know, they got me into this position, so for the future, I'm expecting that this manager will perform. It's a little bit of a side note on psychology on how big money managers and some mutual fund managers, how they window dress, how they keep their job. But regardless of what's going on, NVIDIA is experiencing an unprecedented growth. They cannot make enough chips, or the supply is not meeting the demand. And I think we're going to see 1,500 pretty soon. You know, it's possible that we're going to have another consolidation like we had right here. And if you look at this, so let's go. This is turning into a really detailed tutorial, and I hope this is valuable. If you find it valuable, please like the channel, subscribe, and I can promise you one thing, you will learn a lot. So 78 days, you know, it's half of what it was here before we consolidated, and we made new highs. In a couple of days, Monday, June 10th, the stock will split 1 for 10. Okay, real quick, what happens when the stock splits? It basically, the price gets divided by 10, which meaning, let's say if it's $1,000 stock, it will be $100 stock. But if you had 100 shares, you will get multiplied by 10 and you will have 1,000 shares. So if you had a portfolio of 100,000 shares, you will have the same portfolio of 100,000 shares. The only thing is that the price will be 10 times less and the amount of shares you have will be 10 times more. There's nothing else that will happen. The reason they do it is because, number one, the stock becomes more affordable to more investors, which is a good thing for demand for the stock. The expectations that the new buyers who cannot afford to buy it at 1,000 or afraid to buy it at 1,000, they will come in and buy it at 100. And another thing, more institutions can own the stock. Okay, here is the cool thing about TradingView. You hit this house looking thing and down here it says more NVIDIA financials. You hit that part and it gives you an overview. It gives you all the information that you may need about the company. Here is the market cap, 2.7 trillion. Here is the price to earnings. Here, when it was founded, the CEO, one of the coolest guys on Wall Street, earnings per share, number of employees, and here it tells you what it does, just in few words. Okay, ownership, we have 2.46 billion shares. Free float means what is out there. So 95% of the stock is traded in the market, and closely held is what the insiders hold, and they hold only 4.22%. Now, once the stock splits 1-for-10, then we are going to have not 2.4 billion shares, we're going to have 24 billion shares of this company, thus allowing more financial institutions, more money managers, and large investment funds to get in and get out easier out of the stock. It becomes more liquid, it becomes more attracted, it becomes easy in every sense for funds that buy in millions of shares, tens of millions of shares. They can easily trade in and out of a stock that has 24 billion shares than the stock that has 2.4 billion shares. It really is that simple. I think I made it more complicated than it is, but let's go into valuations. These show us price to earnings and price to sales. So price to earnings, meaning if you divide price by the earnings the company makes, it will take you amount of years to get the money back. But in high growth companies, you don't invest to get your money back, you invest to see appreciation in price. In this case, it was 116, but look, in 2023, it dropped back down to 51, meaning that the stock price was rising a lot slower than the company's earnings, and that is very unusual thing, and that's what makes NVIDIA more valuable. Here on top, you have this little X. If you want to go back to the pictures, you just kill the X, boom, and here we are. Okay, so one of the greatest traders on Wall Street was Jesse Livermore. People say that he is a fictitious character, but there's a lot that you can learn from the book called Reminiscence of a Stock Operator. When I started trading back in '99, there was not one trader that I knew who was allowed to start trading without reading this book at least once or twice. And one of the things the main character talked about is that when the stocks cross a round number, they tend to run to the next number. And we had 100, then we had 500, now we had 1,000. So even if you don't look at the fundamentals, if you just look at the price patterns, and the reason why we look at price patterns, just because a lot of people look at price patterns. If you go back to 1980s, there were just a few guys and girls who would look at pictures and chart and, try to guesstimate where it's going to go. Now there's so many millions people that are looking at things, at different things. And you need to know all the major things that other players are looking for, because when it all clicks, it's just an explosive move and you don't want to be caught on the wrong side. One of those things is $1,000 mark. And the idea is that once it crosses that mark, it tends to run, it wants to go to 500. It reached 200. Then the next up, we're looking 500. I think I said enough about NVIDIA. I think I went way deep into this thing. But one thing that I understand is that people who are looking to learn and people who are really studying the markets, and they want to find a way on how to get into their investments at the point that offers the highest reward and the lowest amount of risk, they will spend time watching this. And this video is made for people who want to learn. You have to do the work. You have to come up with the plan. And when you see that everything aligns, you have to execute it. The reason I did this is just I wanted to show you that you can have a limited risk. We're looking, if my entry price was 836 and this thing went down to 760, we're looking 40 points, okay? 40 points, it's $200. On a small position like this, the account was down $200. Now we are up 6.5 times from the drawback. And that is how you find the trades that will make your yield curve consistently rise. You know, you want a consistently rising curve. You don't want to see anything like this. If you see anything like this in your equity curve, that means trouble. You want it to go like this, like kind of like chart of NVIDIA. And after looking and discussing this, let's just jump in and look at the performance of this account. So here we're going to go. It is the second video from the end. So it's you'll see May 3rd. It's the one before it. I'm just going to open. Ladies and gentlemen, welcome to Only Trade to Win. It is 2 a.m. and I'm going to find a spot where I am talking about positions. You can always go there and look for yourself, but basically we're looking at this part. Account balance was 31,000 and equity 32,324, which means I had about $1,200 in open P&L. Now we jump in today and the account balance is 34,990. And I have 38,918 equity, and the open P&L is here, $3,900. Let's go to this part. Look at this. I have 70 positions. I have an experiment with the biotechs. Those stocks trade like crazy. And basically what I'm trying to do is come up with a methodology that will allow a small account, a small trader to get into those and not get hurt. And let me tell you, even with 25 years of experience, having so many positions, I have something specific that I'm working on, but I have arranged my P&L from the biggest losers to my winners, and we're starting with the losers. I took big losers and I took a lot of losers. I made a lot of mistakes, but what talks is the money, and the money is showing that overall I was doing more profitable trades than the losing trades. I had some really bad trades, and I would like to make a separate show on that because there is a lot to learn. And what I did was I just proved that the basics always work, and there are rules that you have to follow. And once you start breaking rules and trying to trade around your losing position, that's when you really get smoked. I'm really fortunate that I did not experiment it on a large scale, or I experimented it when I had some cushion. But I have to warn you, if you don't have the rules that you must follow, you will lose all your money and you will lose it really fast. Okay, losers. Now let's go to quantity right here, QTY, UTY. If you click on it, you can arrange by the size of the shares, but the size of your positions that you're holding. 0.1 Ethereum, this was my big loser. I do not like trading this thing. I don't even look at it. I don't want to see it. You know, I don't know what it is about Ethereum, and for you will find some things will just not work for you. And one of the most important thing is just to cut them out. Just cut out all your losers. Stop looking at them. Stop following at them. Stop trying to get back. You just lost the money. It doesn't work for you. For some reason, the personality of that security does not match your personality. And there's no reason to change because we have, thousands and thousands of other things that you can trade and invest in. So if you have something that really is not working for you, get rid of it, delete it, erase it from your watch list. Quantity, 0.1 Bitcoin, up $835. Here I have my 1 shares, which are losers, and those are my biotechs. You see, here my losers are small. Here they're getting bigger, still losers, but little ones. So 3 points here, 4 points here. $139 stock, I'm down 4 points. $152 stock, I'm down almost 4 points. And now we're getting into the winners, and fortunately for me, they're getting bigger. The quantity that I'm holding is getting bigger. Oh, by the way, I need to cover SMCI. It reached my price target. I have my bids in. Okay, we can go back. Okay. PLC, Children's Place, $15 stock. I have 10. It's a loser. I have 10 of this small losers. But what I'm trying to tell you is that I would like to have bigger numbers in stocks that are winning. Now we know that my losers are small. My biggest loser is down $37 again. Last week, I just felt really uncomfortable at the beginning of the week, and I trimmed down the positions because it was, besides having 70 positions, it was getting really volatile. So I just trimmed down the losers, and here's what I wanted to show you. Here are my P&L. I clicked on this column until the arrow is showing down. Now on top are my most winning positions. If I click on it twice, I have my biggest losing position at the top. So the biggest loser right now is $37. And the biggest winner is NVIDIA, and it is up $1,300 on just 5 shares. Again, I mentioned earlier in the show that it reached my price target. I realized the gains. Then I waited for the stock to run and pull back, and I had a bid 15% from the top. I got filled. It went down additional about 5%. In 4 or 5 days, it reversed and it showed me green, and now it is running. And if you look at this, I just wanted to show you this page and tell you that when you are starting, first you will trade small size on paper. Then you will learn how to size up. Then when you'll start trading real money, you will size back down, and psychologically you will feel a lot better knowing that you held a bigger amount and you know what it did to your equity curve. So when you go to a smaller amount, you'll be able to hold on to your winners better, and you'll be able to get rid of your losers because they're not going to be so big. You do not need to trade big size to make money in a volatile market. And this is experiment and an attempt on building a methodology for a small account. And again, it's a lot easier with a big account, because when you're buying small size and you're showing losses on the big account, you just have more room to play. But when you do it with a small account, it can end really fast. So let's see. Is there anything else I wanted to share with you today? Not really. We follow the leaders because leaders are the leaders, because they have more money inflow than the outflow. We have the leaders because the buyers are more aggressive than sellers. And we assume that it will go on like this until something changes. And when that something changes, if you follow your stocks and all your investments as closely as we do here on the show, you will be able to quickly tell that something is changing. And if we look back, and we look back at the beginning of the show, NVIDIA, Apple, Meta. NVIDIA and Meta were the leading stocks since last November. Number 1 and number 2. Number 1 NVIDIA, number 1, 2. Number 2 Meta. Number 1 NVIDIA, number 2 Meta. Meta is the comeback champion for the last year. Go back and look at the shows. They did a lot of coverage because this stock was down more than 75% in 2022, and then in 2023 it was up more than 400. This is a great example, and following it like this, you would be able to see that something is changing. And in this case, there's no change. NVIDIA is the leader, Meta is right behind it. NVIDIA is the leader, Meta is right behind it. Apple jumped in the middle. It's one of the stocks that I recommend you do not short one stock, and that's Apple. Because historically, up until December of 2023, Apple would lead the market. Apple would make its all-time highs before any index, before NASDAQ. So, by shorting Apple, you were wrong 100% of the time. Until December 2023, we had really difficult beginning of the year. Let's look at this. Here is the picture of Apple. Let's see. Here is December. Okay, in December, it made its all-time high. And then from there on, we had a lot of downgrades. It had a lot of sellers. We know that even Berkshire sold some of its holdings, and we had analysts that came out and downgraded it. So what happened was that it went down 18%. And again, same thing for Apple. If it's down 15%, 20%, it's a great buy area. I did get stopped out from the stock, and I was fortunate enough to get stopped out of the profit. But what I wanted to show you here is that look at this. I'm just going to use another tool like this tool here. You see the arrow is looking to the right. It's date range. So let's go from the moment it starts selling off here. It sells off for 140 days, and then in the next 18 days, it recovers to this previous high of 196. As 199 is all-time high. Here is our lower high. Here is our low of $164. Just look at this L. And when you go here, that part shows you that low was 164.08. Do you see that number? 164.08 was low. Let's do it a little bit differently. After the stock reaches its low of $164, so in 130 days, Apple went from 199 to 164. And in the next 30 days, it went from 164 to 192. Do you see what I'm trying to say? It goes up 3 or 4 times faster than it goes down. And that's how you know that the stock is strong. And here, it just so happened there was a trend line from the past. I'm not even going to go back and look at it. I just left it here. Once we get up above the trend line, they try to push it down. It rallies. And that trend line so happened to be a support in this short-term run. So do not short Apple. There are other stocks that you can short. If you want some stocks to short, there are some stocks that are losing money. I will probably save it for another show. But again, here is the end of the month. We go for the year. NVIDIA is number 1. I have columns hidden just to be able to fit all the numbers on the screen. NVIDIA is leading for the year, is up 128%, followed by Meta, my favorite, 26%. Google is behind it, my least favorite. Amazon is getting close to 20%. And the laggard for the year is Tesla, down almost 30%. Here you have our May 2024 review. I know it turned out to be a really, really long review, but I really wanted to take you through a structured approach to something that is so unstructured, like the markets. And I hope this helps you, and I hope you can take some things, implement for yourself, and I hope it will help you to become a more profitable trader and a more profitable and successful investor. Again, I hope this was helpful. And navigate with care. We're in a really volatile market, but the opportunities are plentiful. You just need to know what you're doing. And the way to learn is to learn the basics first. Build your foundation, and on top of solid foundation, you can build any kind of house you want. Take care, everybody, and I'll see you next time. Thank you.